growth from as compared to the last year, 6% in USD terms. Is that's where I think this is the highest ever we have achieved in a quarter as compared to the last quarter, 60% from a USD perspective, and of course we are increasing quarter over quarter as well. Next, operating profit performance, as you can see again in USD terms, we are 52% higher from last quarter of 2020, and again quarter over quarter is also we are increasing. Of course, we are investing more on HR, so you can see that percentage a little bit drop, but we will continue to because we have to invest in HR for our future growth. So, and which we will continue to do that because we, as I said, we need to capture this market digital momentum, and we do not want to miss a bit of it. Next. Net income is, of course, as you can see, it's again 26%. We have a quarter one drop a bit because of course, losses because dollar was down. Now dollar is pretty stable in the upper side. 78% dollar-based net income growth in 1 year from a quarter-over-quarter perspective. So again, that is the performance that the company has shown. I think quarter-over-quarter is also increased from that perspective. So next week. This is, as I said in my first slide, this is our strength that we are geographically stratified as well. So we are not just relied on one economy, one market. Similarly, we are very well diversified from industry perspective. So our export-based revenue is dollar-based revenue is about 80%. That's our strength, and all these markets are growing. Of course, as I said in our director report as well, we have Pakistan business, local business growing because the digital transformation space in PWS as well as startups, everything heating up in this market as well. Finally, I would say, industry, as you can see, again, very well diversified portfolio. So it's not like one industry is affecting us, and all of these industries now, and everybody is focused on digital transformation in these industries. Of course, travel and hospitality was down during the COVID time. We didn't have any of those customers, so it didn't impact us at all. Next, this is our revenue and cost mix by currency. I think we, as I said, about 80% is dollar-based, dollar or euro or AED. It's that base, and our cost is about 80% in PKR. So definitely anything that is positive on a dollar and export side, that is really impact our bottom line from the growth, revenue and bottom growth, of course, because our cost is largely remains same as the rates goes up in the dollar terms. Next, so I think you guys must have seen the announcement that we have acquired 20% stake for $3 million in Retailistan. I think that was one of the strategic position that we have taken, and why. We were inspired, of course, by the team, what they have done in digitizing this supply chain and the distribution space, and the most importantly, the data that they have is amazing, right? We can disrupt a lot of things with that strategic position that we have, and combining with our one load EP systems data, because both are very tied up from a retailer's perspective, because they are both digitizing. One is digitizing the payment side, and one is digitizing the supply chain side. The both can combine, can give us. Nobody has that kind of a combination. Carry with our, of course, technical ability, which no other startup has. We really believe that it's a huge opportunity for us to really come up with a few more things in this space. And you guys, whoever is following Pakistan market, you guys have seen they are Jugnu, of the Retailistan subsidiary, is exactly doing the better unit economics with the better data, because they own sales flow. They have started this in 2015 versus most of the startups have started like a year ago. So huge data that already they have from the retailer's perspective, their unit economics is much better. So we are really excited to have this partnership, and hopefully we will definitely take it forward. Next. So what you guys our investment priorities, right? I think we have with the best results. We are, of course, our DSO is better, so we have strong cash flow generations. So we, of course, pay dividend, and we have this cash flow allows us to further invest and grow rapidly, because that's where cash is king, right? So we really growth oriented. So we really want to robust and increase their growth from using and leveraging that cash that what we have, and make a good returns out of it for our investors and for ourselves. So again, as I said, looking to add new markets, alliances, verticals, talent. This is the key, but these are the priorities, right? That I want to list: investment in talent. That is our core. That we are engineering company, and this is our core strength. We need to operate and optimize through our talent by delivering the quality services globally, and have a recurring revenue, growing recurring revenue, growing repeat customers. So because as I said, the digital momentum is there, opportunity size is huge, and demand is scarce. Resources are scarce in the world. So people in post-COVID era don't care where you work from, and which time zone you are, and if you can give them a great resources, the work is there. So that is our top priority. We'll continue to do that. We have been doing what we will further scale, and I will just mention that in order to have a better retention, we have opened offices in the small provinces in Pakistan to have a better retention and attract more talent. We have gotten like the highest number of fresh graduates all over Pakistan. Nobody has taken even like half of what we have taken. We are training internally. We have hired people and put them on a robust training programs for months to train on what we need, specific targeted skill set that our customers in the global markets need. Also, we are now going after tier 2 and tier 3 universities in Pakistan, and training more. So we not only do this for us, but build the ecosystem here as well. Because if the ecosystem is there, we will be the large beneficiary in the country as largest exporters. So mergers and acquisition is our top priority as well. One of the top priority. We have started late, of course, but we are just not want to throw the money. We are not the VCs. We just want to have a very careful consideration, of course. But inorganic growth is very important for us, and we are actively, very hyperactively working on these opportunities. But we just not want to just get into in the rush. That these days want to be very selective, that and very strategic positions in any company which can give us huge growth potential from the digital transformation perspective. Startup Series A, we again very carefully will choose and continue to invest in these startups in Series A, where we see a huge upside of multiples, and the future, not just the multiples, but where we can have a strategic gain as well. Incubating new ideas. Again, said like now we have critical thinking, critical data. We can come up with a few more ideas which we can incubate and invest and figure out what the next is. Geographical expansion is again one of the key which we have mentioned in our direct report. We'll continue to do that because that opens up more market, more growth opportunity, more net new opportunities for us. And of course, when we hire a lot of people, we have to invest a lot in infrastructure front down yards. So we'll definitely focus on all of them. Next. So OneLoad, I think most of keep question us from a OneLoad perspective, EP Systems, which is our subsidiary. So I thought that I'll share an update, very encouraging update. We are again in hyper growth mode in that subsidiary as well. As you can see, we have added 600 in the last 6 months. So now the growth last 12 months, like our GM, it is 90 million dollars, which is again amazing performance by this team. And our retailer acquisitions, we are one of those highest top three highest fintech companies where we have that kind of a retailer acquisition. With the sales flow and jubilation, I think we will have more to the retailers which we can disrupt than anyone else in our country. So we're very optimistic now as we have pushed the pace to the next level. Targeting exponential growth, as you can see from the number of people we are investing, we're really pushing hard to cover more geographies, like a full selling model, and coming up with a new pilot e-wallet with our EMI license. So we're really, really optimistic about our growth in this, because that's what we were waiting for, where the technology and EMI license are there. Now we have the money, and we will take it up to the next level. Next. So the last is the way forward, right? So systems growth strategy and way forward. As you know, we are growth-oriented company, very strongly focused on just one parameter, is the very foundation of the growth, not just the top line, but the bottom line. And what we truly believe, that customer retention and growth in the existing account that we have. As you have seen, we have a lot of accounts, a lot of clients, which we are focusing, and we want to grow along with them, as everybody is focused on digital transformation. So that's one of our key growth pillars, strengthening our alliances principles. Microsoft, SAP, IBM, they are all investing tons in cloud, digital, data. We are really following up with them, and working very close in the global market space, where we can get a good chunk of their business as well. Enhancing core engineering. We are engineering company by virtue of what we are. So scaling the right talent mix that supports towards the emerging technologies. So we are not scared of technology. If we don't know it, we build it, we train people, and we have done it so many times. So we are not worried about it. It comes, we can grab it, we can scale it. Partner ecosystem, I think that is also very hot space these days, where all these consulting firms, the digital transformation business, but they don't have the engineering capability to execute. And we have signed up so many partners that we can get the work offshore, the engineering work, where they can do the front end work. I think that is helping us a lot in the growth momentum. The strategic tuck-in acquisitions, as I said, we are not desperate. We will do acquisitions, but right acquisitions which can take us to the next level. Inorganic growth is very important for us, and as we are in hyper, so that is really key. Startup ecosystem, I already said. New business, sales coverage, and account management, which I already said. And adding industry verticals, new industries, and technology horizons. These are the few things that we are very religiously following and aggressively pursuing to make sure that we achieve the greater results for our hard work. So I will end it here for the Q&A. Sorry, I took 3-4 more minutes, but I would love to answer as many questions as you guys have. So please, I think Ruhi or anyone, and we'll go from there.
So if you ask a question, you can raise your hand. I'll unmute you. So first from Suleiman and Suran. Suleiman, go ahead.
Hi, Asif. Thank you very much for presentation, and congratulations, great set of results. I work for an investment company based out of Dubai, and I've been following your company for the last couple of years. Haven't invested yet. And again, I've followed your stock, Masha, quite well. So I just want to understand your journey from here on. I know I've seen you've consistently grown by 20-25% over the last 5-10 years, and now you're at about, call it $80 million revenue, $19 million profit. What I want to understand is, again, you're very small compared to our regional peers. Absolutely, and people are comparing you with the likes of Infosys, Tata, and a company that I cover very closely called GCI, based out of Canada. I mean, that's a $27 billion market cap. given the limitations that you have being in Pakistan, a Pakistani company, given the the problem that you suffer because of that, the Pakistani call it label. Do you think you can really grow at this level? Means double in 3 years, triple in 5 years. So you are at $80 million revenue now. We had 116 in 3 years, 320 in 5 years. Or do you think at some point in time you will face that limitation whereby bigger contracts and you'll be limited issue, right? And the reason I ask this question is that companies CGI gives business to Indian companies big time. And I asked my friend to give it to Pakistani companies. He's like, no way, we can't, because we work with US government agencies, very, very sensitive agencies, and they wouldn't even consider Pakistan. So just wanted your perspective on that. Two things: reputational limitations and the growth that you can have over the next 5 and potentially 10 years. Can you be at a $500 million revenue in say 5 or 7 years?
Yeah, I think it's a great question, Suleiman. I think thank you for asking this. I think that's a gorilla question, right? But I think the answer to this, of course, as you have seen, we have done 33% CAGR since last 6 years in the growth. And reputational, I think there is a mark, like post-COVID and pre-COVID, there is a difference. Which market? It's a big market. It's a huge market, actually. North America, huge market. Europe, everything. It's not like you have to work with government agencies. You have to work with big financial markets. So since we have been operating in this space and growing in this space where even the conditions of our country was worst, now we are much better than what we used to be in like 5 years ago. You can imagine now things have been much turned from a business perspective and the focus of government on IT. So I have no doubts, because we have, for that reason, we have the presence in those countries. We are not operating out of Pakistan. We just are not one of the companies where we sit here and just try to sell it abroad in all these geographies by sitting there. We have the teams and the infrastructure and the people there. And that's why we are winning the business. And as I said, we don't go for the government agencies and the security. We have tons of business. We have, as you rightly said, we have very small business, like $80 to $100 million business is nothing in our space, right? So growing from there I don't see that as a challenge, because we are market is too big, and we don't have to choose those sectors which are not really friendly with the country risk or whatever you say. So the addressable market is trillions of dollars, and we are very small in that space. So definitely people are willing. We have a lot of customers right today, which we serve, and they don't mind really from where you work from, right? And post-COVID, I think pre-COVID and post-COVID has changed, because the game is where the skill is. If you're providing the right service, right skill set, and and you are delivering on your promises and you are delivering to your customers, believe me, they don't care. Just take out 10, 20% who are not willing to work. We don't care. It's a huge market space. So I think we have a fundamental belief that this cannot stop us. And we are rightly positioned in those geographies. Our offices, our people, local people, not like we know how to sell in those markets with the local people, and how to network with them, and how to alliance with the partners. As I said, this is why you have seen these are the strategies to come up with the growth. We are not tying up on just sales. We're tying up with the partners. We're tying up with alliances. We're tying up with so many things, right? And expanding our geographical footprint as well. So we are not relying on one. As our numbers are very small, I don't see any reason.
Sure. So would it be fair to assume that internally you do target, say, a 25 or a 30%, 5 and potentially 10-year basis? Is that what you're still aiming to, and at some point you will slow down?
I never think like this type of thing, but I can't issue the forward-looking statement as well from that perspective that we are going. But of course, the history speaks for itself. So we are nowhere from our intent perspective and from our leadership and management, from our strategy perspective, we are nowhere think about that. Why would we slow down?
Thank you.
When the market is growing, I think nobody will slow down.
So we have another question. Hamad, go ahead.
Good evening, Asif. This is Hamad from Optimus Capital. Congrats on the result. Just have one question on your capital allocation policy. So you said that you was looking to raise more money this round. The systems itself, or intend to invest in Jugno, which is subsidiary of Salesforce, and subsequent rounds as well, or do you intend to maintain your current investments as it is?
It depends how they perform, right? If they continue to perform the way are, we may increase. We will make a decision when they get to the Series A, they get the VC or PE, and we'll see who is coming on board, and we'll decide based on that. So situation, and depending on the numbers and depending on who is coming on board, we'll make those calls. But we're bullish about it. That's what I would say.
Got it. And just wanted to get a follow-up on the startup ecosystem in Pakistan. What are your thoughts on valuations in general, the ecosystem, given how early they are? And what verticals are you looking to invest in particular in Series A or C-level rounds?
I think our only criteria, since we are not VC, is where we can add value and where we can get the opportunities in the data, so whatever the space, how can we disrupt in the current ecosystem. So we are very open for any industry, but like digitizing the supply chain and the retail was one of the core, because we work in that industry. We know that industry very well, and the fintech space is huge space as well, one of the early disruptor as well in the form of OneLoad. So if you just even like, I would say, focus on these 2-3 industries and come up with unique propositions, I think that is good enough to start with. Of course, it doesn't mean that we don't go to the agri, another hot space, when there is an opportunity there. So every opportunity we evaluate on the merit and then make a call.
Got it. Thank you.
Thank you, Mr. Asif, for the presentation. I work for a boutique investment firm based in UK, and being a foreign investor, seen increasing concerns over the ESG scenarios that are implemented within business practices. Most of the firms these days are complying with the United Nations Sustainability Framework, and this is an increasingly used term these days, where investors are looking for companies which have sustainable business practices. I hope you must have gone through some of the concerns from the foreign investor that are invested in your company. My question is specifically related to systems, its operations in the foreign country. Have you implemented or implied any environmental policy framework which can actually see, for example, any damage that your operations, tangible or intangible, have on the environment or the social or the corporate governance? Any framework I'm particularly concerned about that you have in place that you actually implement in your business practices?
Yes, we do, and we have a steady GSG framework, and as well in last 2 years, I think it has been this most important. This is the one of the question that every investor has asked. So we were bound to even focus more, to be honest. So we are really focused on that, and ESG and sustainability framework and all these and all of these things, we're pretty aware. We are very focused on that, and we are following as well as many as we can. So I'm aware of that, and we all are aware of that, because this is one of the questions that has been asked in every presentation.
So, like most of the companies in Pakistan, they do not have much disclosures in this regard. So
we put that, if you read our annual report, we have as well, and all of these things.
But as compared to the other companies, other regional companies, for example, Vietnam and Bangladesh, some of the companies actually publish their sustainability reports. to comply with the United Nations framework. So do you foresee that this step can be taken for Pakistani companies? I mean, I know being in the information technology business, the carbon footprints or the other environmental damages are very less and safe. But again, there are consequences to every business practice. So
we don't mind. We will think about that as well. And as we include in our quarterly and annual reports, we will think if we can produce a separate report as well. And I think it's a good point. So we will make a note of it and see if what we can do.
Asif, I would like to add here.
Yep. Go ahead.
Yeah, Priya, time when we did some mapping with the UN SDGs, and this year we are working more on the disclosures and compliance with the policy. So we will add some more information in our annual report.
Okay, just another question.
We are formalizing it.
Yeah, just another question. What was the name of the certificate that Mr. Asif and that systems is compliant to? I missed that name.
We just won in a circle award. Is that what you're saying?
No, it was starting with T. I missed that name or number. I mean, I'm not sure.
Sure. But
yeah, I'm also not sure what you're referring to.
Okay, no problem. Thank you so much.
Maybe you can ask this question offline. We will try to respond.
Okay.
Who's next?
So we have another question from Sandeep. Sandeep, go ahead.
Hi there, Mr. Pure. Hi, this is Sandeep from FM Partners. And first of all, congratulations, and you've been executing your plan pretty well. And we are very happy with that. I just wanted to focus a bit on your M&A and your domestic strategy. What I see is your RPL acquisition is probably integrate with your EP systems. And then I also see that you have been building 8 regional sales hubs across Pakistan. So I wanted to understand your strategy over the next 5 years, how this business will look. Just to draw parallels, would it have something like a marketplace and a P2P and e-wallet coming together as we saw or as we are seeing in Kaspi in Kazakhstan? What is the plan in this part of the business?
Yeah, I think as you have seen in the presentation, EMI license, we are going to offer these wallet services as well. And with this integration of digital supply chain integration and as well as the wallet and other ideas as well that what we have along, because there's actually, that the data is the key. So next 4 or 5 years, because it's a market size is huge, even like 3-4 companies in this space right now is nothing actually, because addressable market size is in billions of dollars. So we see a huge opportunity in terms of that side of the growth, in terms of growth, yes, and how these unit economics work and how do we leverage the data that it's available in a true form and come up with the great ideas which can help open up the industries and help connecting between various financial sectors and these undocumented retailers through both of our initiatives. So yeah, next 5 years, I would say it's as you guys must be following our market, it's really getting hot up because of the number of people we have, 220 million plus population with the smartphone penetration, with infrastructure heating up as well from a broadband perspective and so on and so forth. So a lot of things are happening with the young population. And so it's a lot of variables that we have. It's into the mix, and we really see that in the next few years, this space will be more robust and will give us the multiplier effect, not just in terms of what we do, but in terms of other byproducts as well.
It's kind of related question to this. For this strategy to be successful, I think there are 2 main things that has to be done very well to have a very good user interface, kind of a super app. And the second one is from your end, data analytics. Can you take us through what are you doing on these two fronts?
The data analytics, of course, that's what I would say, that this is the key, that what we have, the data from these transactions and the retailers and the distribution, that what these companies do, and that's what we will leverage and use. Of course, we are planning it in the planning phase, so I can't just issue right now what we're trying to do. But of course, you guys will know our plan and how we're leveraging these data points.
And on the user interface, are you developing anything which you can?
User, of course, user interface is like, it has to be intuitive, and it has to be how these B2Bs and B2Cs space is heating up from that perspective, that all the user interface and how the payments and all the payment gateways and all of these things are coming up in our country as well now. So how to make sure that it is self-intuitive and people can use and leverage that, so they don't need to be very well educated to use those user interface as well. And we can give them more to these applications as more and more use cases we develop. We will use those apps, as you said, like consolidating those apps into these apps. All the use cases that are pertaining to this space, the supply chain, and fintech companies, we will add those use cases into those apps, so we don't have to roll out these massively again and again. So that's what our plan is actually.
Right now in developing this kind of app? Is it in the pilot phase, or it is just yet to kind of build it?
Yeah, I think developing an app or things like that is in it for us, right? We're a technology company. I think it's all about ecosystem, right? It's all about connecting the dots in these ecosystems, that who will use it, how we will use this data, and how we can link up backward and forward supply chains and the financial institutions. So I always say that in these startups, it's not like about creating the technology stack or an app. It's about the idea, and it's about the ecosystem, and it's about the scalability in the model and the unit economics, that whether these unit economics is going to work or not. So that's about it. Next. I hope I answered your questions.
Thank you, Sandeep. We have another question from Zubair. Zubair, you can ask your question.
Hi, Asif. Congratulations on this call. For yourself. There are two questions basically which I would like to ask. First is, we see a lot of competition coming from these new venture capital firms, and they are willing to pay up quite significantly. So how do you do you feel that there are opportunities in this space which other people overpaying you have missed upon? Or my exact question is, do you have an institutional process? I understand a fantastic IT company, but do you have you developed an institutional to basically screen out ideas, and which ideas you want to, and it's basically asking you, that is an institutional process in place to evaluate these ideas that are coming?
Of course, we have institutional process, we have the experience, and we have the people as well. So not just doing the financial due diligence, but the technical due diligence, people due diligence, like functional due diligence, ecosystem. And we just don't, as that's why we have not done these things before as well. We were just we just do it where it makes sense, right? So we do it. We have institutional process to your question, and we have the people to do it as well, and experience as well. But of course, these are the best.
Another question will be, you have ample on your balance sheet. Now, there are two ways to grow. So if you want to, you mentioned a couple of weeks back that you were talking to the central bank to allow companies to take out and to buy out good companies abroad, and that's the best way probably to grow businesses. Do you see any developments on that front, or the bank is cooperating or allowing local companies to buy companies abroad and to grow on?
Very open. I would say more open than I've seen in the last 6, 7 years. I'm in Pakistan, so because they understand this is the only space that can grow our exports, and uh, it will. They are willing to listen to the policies decision as well. Right now, if you recall, that State Bank has allowed 10% you can take from your export without being taking a permission from the State Bank through the local your agent bank. But I think that's not enough for IT companies because the valuation is crazy and valuations are different in IT companies versus others. So we are really we're very optimistic. I would say that once the opportunity is there, we will be allowed. And of course, we are working on the framework as well in parallel to make sure that we don't run. It's not just for us; it's for the ecosystem and it's for the industry with certain rules and certain conditions. So it can be approved quickly because in our space, agility is the key and it has to be very quick and nobody very right.
Okay, and last one is that we've seen that a lot of developments are taking place on the technology parks and fronts. So, going by the revenue CAGRs that you have been highlighting, the 33 or 34% over the last years, based on the understanding I have, I think when these kind of developments take place, the technology, other stuff comes to the scenario, we can see rapid growth. So, in my own observation is that probably a 30 to 40% CAGR can at least multiply by twofold once we see these development in the form of technology parks and foreign partners coming in and doing collaborations with local partners. Do you think similar way that the revenue CAGRs can maybe twice or thrice given the developments on 2 years, 3 years time?
I can only comment that yeah, these are the great areas. These we need infrastructure. If we recall in my presentation as well, STZAs will definitely, and our STZA policies at least it's better than all the countries that we have seen the comparison as well. So yes, this will create an opportunity space, and foreign companies will come and they will look for the large companies or other companies to do a JV or SPVs or relationship with them. So it definitely spur up the robust growth engine. That's what I would say. But these things help, for sure.
Okay, so we would like to take. We have question from Junaid. He's asking the quarter-on-quarter revenue of the company from European region is down 13%. The revenue increase in first half is also expected. So can you shed some light on it?
Revenue expectation is low. Can you repeat the question? Sorry.
Yes. Quarter-on-quarter revenue of the company from European region is down 13%, and it is below expectation. So can you shed some light? What is the reason behind it?
Yeah, I think in Europe, of course, this COVID, from a COVID perspective and travel perspective, and there's a lot of things going on over there. And I think we have few customers who have slowed down because we were in Europe. We were only mainly focused on retail sector because we just started a few years ago. So it was not like a wide portfolio that I've shared that in other markets we have many pockets. So it's not like just one industry covers all. So of course it slowed down during the COVID times, but now the things are again heating up as the restrictions are going over and things are improving post COVID. Even in retail space, we will see the growth. So we are optimistic that Europe will pick up as well. And we just started, as I said, like from a UK perspective, we are also going to get something.
Okay. A similar question regarding your North America business. It has posted loss of 35.6% and net profit margin has also been on the lower side. So what was the reason behind this particular aspect?
As I said, like we are in and for the future growth, we need to develop the talent and hire freshers and hire experienced people and train them in the technologies that what we do. So, of course, to build up the business, we have to we see the pipeline. So, of course, these things will come up when we invest more in talent. This is our OPEX, so there is no other place we can put it, right? So these things will come as we will build more and more talent space.
Okay, there's another question from Nabil. He's asking that before the spin-off of VisionNet, it was giving 40 to 50% of its business to Pakistan, but now its allocation has declined to 25%, and the rest of the business is diverted to India. So, can you explain the reason behind?
I think I don't know from where these numbers you are.
In the chat well. I think
Yeah, the numbers, whatever. I don't know where you got the numbers, and the point is, it's not like VisionNet business is, of course, offshore and onshore. They have a lot of people in US, and they do the business in US as well. So the contribution is not about from which geography to divide. Whatever we're working, we are growing, and you can see the numbers growing as well, like 67% growth as compared to the last year in just the VisionNet business in IT, 67% year-on-year growth. So of course the growth is happening. So I think the numbers you have is I don't know from where it got. So I that number.
So I think we would like to take one or two last questions. There's a question from Mohammad Hassan. He's saying one of the reasons for investing in Retail Islam, this synergies system will gain from one load. Can we expect similar business venture for investments?
Yeah, of course. Future investments we align with what we do, right? Where we have strategic interest, where we have a strategic synergies, right?
Okay. I'll see if there is any further questions. So, just a general question regarding the overall IT landscape, and there are multiple questions regarding government's targets of increasing their IT exports. So what are your stance on the same, and what are your take on the opportunity that lies ahead?
As I said, opportunity is huge for our country, for us, for whoever in this space right now, because digital momentum is there and people have to do it. And the scarcity is there because the growth has emerged. And whether it's, you name it, any country, they are all scrambling for the resources, for the retention, cost, and everything, right? So opportunity size is huge. Yes, targets, I think, but of course, like this industry last year has grown 47%. So achieving that kind of a growth year on year is possible, yes. But like, can we triple it in a year? To be honest, it requires a lot of effort on the back end, and things are shaping up. Everybody's focused, but I would say like estimating 40 to 50% growth on export in a year is that's what my view, but I can be wrong, but that's.
So I think most of the questions have been answered, and I think it's almost 6 now. So we would like to thank you very much, Mr. Asif and Ms. Ruhi, participants for joining in and attending the meeting.
Thank you, everyone. Thanks for participating, and we'll see you again. Thank you.
Thank you.